Hi everyone. Express Business Valuation Financial Statements. To start, we need to look at the assumptions. If I come up to the project assumptions, there are two here that I need to take a look at. The first one is the first fiscal period ends is expecting a 12-month period. There's 6 columns of data, and this sets the titles at the top of the columns. And so we need to find what that financial statement ending date is and put that in there. The next one down is for the last fiscal period ends. This does not have to be a 12-month period. It can be a partial period. In order to change these, I can use the drop-down arrow and see a calendar function here. I can put my cursor inside of the month or date or year and use the arrows next to it and use the up and down arrows. So in this case here, if I change this to 10/31/2014, you can see that I have a different stub period from the financial statements. I'm using 10 months instead of 12, and the program will recognize that. I can also type over the top of that and just put in, instead of 2009, I can type over the top and say 20010. And down here, I'll type over the top and I will say 20015. And that's how you set the labels that happen at the top of the program. So as I'm working in my project and I bring it up again next year, I may want to add a fiscal period. I can do that by clicking the taskbar button on top of the project assumptions. That will take the year here, add a new fiscal period to the beginning, leave an empty column there, and copy all of the other data to the left. If I don't want to do that, I can also come over here to Edit and remove a fiscal period. And what that will do is reduce my first year and remove the data that's in that last column and move everything over to the left one column so that I only have 5 periods instead of 6 periods being shown. And that's how add fiscal period and remove fiscal period work. The next set of assumptions that we need to take a look at are the financial statement assumptions themselves. The first one is that EBV has a static balance sheet and a static income statement. However, you can have an optional number of income statement operating expense accounts, and that's where you set the value inside of here. If you have a stub period, you'll want to use the annualization method. No annualization, last 12 months, or percentage of the total. So in this case here, if I'm using 6/12, I would be 50%. If I'm using 9/12, it would be 75%. I would take 10 and divide it by 12, and that would put in the percentage that I was looking for. Cost of goods sold and inventory allow the balance sheet and the income statement to have inventory and cost of goods sold. And then when you adjust, we have the ability to tax affect those adjustments either as a percentage or as in manual dollars. If you want to figure out your own tax percentage, you can figure out the tax percentages or the dollars manually. So if I wanted to figure out what the manual dollars were on a particular year, I could figure that out, type in dollars. If I just want to say take a percentage, 32%, 40%, whatever your number is, you would type in the percentage and we would adjust the adjustments for that percentage. The next step is to look at how to input this information. So on the balance sheet, as I said before, these are static. Please don't go out to Excel and insert accounts in the balance sheet or in the income statement. There are a lot of other accounts or a lot of other sheets that have to deal with that. So for instance, if I come over here to the historic balance sheet, it has the same architecture. If I come down here to the adjustments and I look at the balance sheet adjustment, it has the same architecture. So if I insert up on the input an account, that's not going to flow through to the rest of the schedules. So if I edit in native Excel, I have to be careful about not changing the structure of the balance sheet or the income statement. We do have the ability to add up to 20 optional operating expenses on the income statement, but that's as much customization as we can get to. If you're looking to customize the financial statements further, please contact a sales rep and ask them about the Pro version. We expect whole dollars to be input into the system, and the gray boxes are where you would input that information. Accumulated depreciation is a negative, so it's showing up with the parentheses around it. On the income statement, it's the same situation. And so what we are expecting is here's those optional 20 accounts that you can put in. I think we had 9 listed on ours. Because I have a partial period, it's going to say, okay, here's what my partial period is for October of 2015, and then it will annualize this up based off of the assumption that I have chosen in the assumptions above. Once I've input my financial information, I can take a look at the different charts and see what the different values are, and then I can adjust them or normalize them. The balance sheet is normalized in 2 ways. The first way is to get to an adjusted book value, and we're simply going to mark the balance sheet plus or minus in the adjustments column and get a new adjusted book value in this column. EBV takes it a step further, and instead of doing a separate model for liquidation value, they will say, let me get my percentage and put that in this column here. So let me erase my little markings, get back to my piece. If I have cash and I want to say the liquidation percent is 100%, cash is worth 100%. But if I have accounts receivable, I can type in maybe 50% or maybe 80% if they have a really good collections process. Inventory, let's say there's not very much good inventory in there, a lot of it's obsolete. I might only get 50% on that. Other current assets, I might get 0. And you can see how the percentage is taken against the adjusted book value column and then put into the liquidation value column. And that's where the asset valuations will come from. The income statement adjustments start with historic income before taxes. And so this is being pulled from the historic income statements before taxes. And then you type your plus or minuses to the revenues or to the expenses. And then in this case here, I'm saying take 34% of my adjustments as the tax amount. Once I've input my numbers, I can look at the adjusted income statement and see if it's appropriate. Remember, the models are going to be pulling from the adjusted income statement, and so this is where you can see exactly what that would look like. And that covers financial statements.